I'm Michael Fox, and this is the Prospector Podcast, and I am joined by returning guest Chris Temple of the National Investor. Welcome back, Chris.
Hey, Mike, how are you?
I am doing very good. I was in Vancouver for Investor Conference Week last week. You guys got a new president officially. There was a Fed meeting, which we're going to talk about. But, I was away and it was just like all hell broke loose. There was just so much going on and, it's gives us lots to talk about. But let's start with yesterday and Jerome Powell and the Fed announcement.
Well, as everybody expected ahead of time, the Fed decided not to lower interest rates again, which it had done the last three Fed meetings by a total of 100 basis points or 1% That was pretty well telegraphed. And what became even more overt yesterday, and also really to no big surprise, is that the Fed is going to be, barring anything big as far as a change one way or the other on the data, as they call it, or other issues that they follow, which we're going to get into. The Fed's on hold pretty much indefinitely right now. So there's no compelling reason that they have to lower rates further. There aren't yet reasons for them to raise interest rates again, unless inflation continues to creep up. They got a little bit of help after the fact this morning when the first look at Q4 GDP in the U.S. came in at 2.3%, which was a tad less than had been expected. But if you go back to a lot of what the Fed has said for the last year or two now, that's not anything that's going to alarm them growth-wise. You add to that, as Powell pointed out yesterday, the fact that while there were signs when they first started lowering rates last fall and started out with that larger than expected and maybe in the rearview mirror foolhardy 50 basis point cut because it looked like the jobs market was finally weakening enough to justify it. Since then, it's actually strengthened a fair bit. So Powell reminded everyone of that yesterday. And again, all else being equal, they're on hold. They're going to stay there for a while. And nothing that the newly sworn in 47th president blusters about publicly is going to change that view.
No, but in reality, and given the world environment right now, you see a lot of the other major central banks, the European Central Bank, the Canadian Central Bank, the Great Britain Central Bank, they've all been lowering interest rates. So Powell holding is almost tantamount to raising interest rates in that it's going to have the same effect on the U.S. dollar, is it not?
Well, in a way, you're right. I've said many times that whether they like to admit it or not, and quite the contrary of some of the people out there that continue to spin these fantasies about we're going to see the dollar upended next week by a new BRICS currency or whatever other nonsense you hear about out there. The fact is that the Federal Reserve is the de facto central bank of the world. The world is still largely on a global dollar standard. That has lessened some over the last few years as countries start to do bilateral trade with their own currencies, which, God bless them. If I was them, I would be doing it too. But the big picture still is of the dollar being the dominant currency in the world. So what happens is when you have these policy differentials, you're starting to put more and more stress on the weakest links in the global market chain and economic chain where the dollar hurts a lot. Most notably, as has been widely covered, emerging market nations of various kinds that are in debt up to their eyeballs. And most, if not all of that external debt is denominated in US dollars. So if they have domestic issues, weak growth, problems of whatever kind. Brazil has been a textbook example of this recently, where their currency hit an all-time low. That makes servicing external obligations denominated in U.S. dollars not only much more onerous, but at some point it becomes impossible. And there have been times variously over the years when something like that broke, whether it was Latin America, whether it was the Asian currency crisis more broadly in the late 90s. There was some knockoff impact of that when a dollar popped up in response to the global financial crisis in 2008. So that's something that, nothing's apparently going to break tomorrow, but it's something I think that the Fed, if they're not keeping an eye on it, is making a mistake not doing, because the strength of the dollar relative to everything else in the world is going to, keep a wet blanket on some of these other countries, and at some point could cause something to break. I pointed out recently that on a trade weighted basis, the dollar has been hitting successive new all-time highs since last fall.
Yeah, but speaking of things breaking, the gold market seems to be betting on something breaking probably sooner than later. We hit a nominal new high today, and it did cross over that magic 2,800 mark for a brief moment or two. So gold is indicating that it thinks that a higher dollar is going to cause breakage in the system somewhere. Is that the way you see it?
I think that's a part of the story, but it's really multifaceted. I just did, if people go to my own YouTube channel, and there's a video and audio version, both of this is not your father's gold market, that I put there. And I explain a lot of the misunderstandings that people still have today. And like so many people in the gold space, it's like they never left the 1970s. And that's how they view the gold market. It's how they view interaction of gold and other commodities. This isn't the 1970s, it's 2025, and a lot has changed. And one of those things that has changed, it is not at all unusual that gold and the U.S. dollar would be rising in tandem as they have done for a while. And even more remarkable from the standpoint of gold, gold has gone up when you've had long-term U.S. Treasury yields move back up nearly by 1 full%, even as the Fed cut short-term rates by that amount. So gold is looking at a whole host of issues, in my opinion, Mike. It's not any one thing. There's still a lot of net central bank demand on the part of central banks in other parts of the world. There's a lot of uncertainty. There's been some stress in the market of all things recently over physical gold, where lease rates, not just for gold, but lease rates for silver, all of a sudden spiked in the just in the last few weeks or so, meaning gold was getting hard to get. A lot of it has been over confusion over what kind of tariffs we are or are not going to see 2 days from now as we're recording this, because the president has promised some tariff decisions by February 1st. It's over monetary policy. It's over the levels of debt. It's over all the uncertainty in the world. And that's a big one, too. I don't think it's been covered enough that part of the reason for both gold doing well and basic materials and base metals and even energy to some extent not doing well is over some of these same things. Worries about how tariffs are going to upend global trade and maybe net result harm global trade. They're going to add to the uncertainty. And then the icing on the cake, such as it is, some people might not like the taste of this particular icing, is that as I was talking in separate conversations a few times in just this week with other colleagues in Canada, President Trump is famous for loving to talk big and a lot of bluster, and a lot of it is negotiating tactics, and he doesn't really mean what he says. And a lot of people, even though this is a second go around, you don't know when to take him seriously and when not to. But I'll tell you what is to be taken seriously, and what he is extremely serious about, is what the New York Post in one of its covers a while back kind of renamed the Don Roe Doctrine. This, of course, a takeoff on the Monroe Doctrine. And don't minimize how serious Trump is about resurrecting this. And he is damn serious about getting control over Greenland. He is damn serious about taking back the Panama Canal and the control of it. And he is serious about wanting to have, and he's being tough about it now because you have no real national leadership up there. But, Canada's not going to be the 51st state, but he wants to get his mitts in Canada even more and have closer integration between our two countries than he already does. The tougher one is going to be, well, Mexico is going to be tough because you do have strong national leadership there, as he's already found out with President Sheinbaum pushing back on a couple of things. But the big one's going to be all throughout Latin America. And this is going to be interesting because Trump hates the fact that as much as anything, and he looks at it not as much from a military standpoint, though that's coming into the picture too. He looks at it from a business standpoint. But Trump really is apoplectic over the fact that over a period of time, U.S. leadership from both parties and big business have allowed China to gain the foothold in South America that country has. And I think that the best microcosm and what's emblematic most of that was last fall when there was a big, I think it was an ASEAN nations meeting in Peru, and the disparate treatment that President Xi from China got in Peru, where he was kind of king of the hill, and Joe Biden being treated almost as an afterthought. I'm surprised they didn't make him park cars. Okay, that's something that just absolutely galls Trump. And so on all of these different things, he is going to be looking forcefully to restore or impose, as the case may be, greater U.S. hemispheric hegemony. And it's like one of his own inner circle said the other day, yeah, we're going to break some China, but we're going to make some changes. We're going to make some changes for the better for the U.S. And I think that's, as much as anything, one of the unmentioned or lesser mentioned reasons why gold is doing so well is because of that alone.
Yeah, gold is always a hedge when there's a change afoot. There's a lot to unpack there. Let's start with the tariff situation. Given it's his favorite word, tariff, and he's likely to follow through with these threats. What did Powell have to say in how the Fed was going to deal with the fact that the U.S. was going to, be pushing higher tariffs across the world?
Well, he actually spent a lot more time in the last Fed meeting in December talking about tariffs specifically than he was willing to yesterday. Unlike the December Fed meeting when he was very blunt and defiant and almost challenging Trump over the threats that Trump was going to try and fire him and all this kind of thing. Yesterday, he just didn't want anything to do, for the most part, with talking about Trump at all. All he would want to say is that, look, the jury is out on a lot of things, and no, the president has not contacted me directly to express his views, and he's not going to respond to anything said in public for sure by Trump about interest rate policy or the dollar or anything. What Powell said in December, we only got a shadow of yesterday, and that was on tariffs. Basically, that here again, the jury is out. We don't know what the impact is going to be. Now, I told you after the last Fed meeting when we had our usual post-Fed, post-mortem conversation, that one of the things that Powell rather is very disingenuous about, and he was again yesterday in talking about tariffs, is that the backdrop that he was working with in 2018 and 19, when the Fed was entertaining what they should do differently, if anything, over Trump's tariff policies then, is that back then you did not have the still significant inflationary bias in the markets and in the economy, which tariffs might add to. Back then, you still had relative disinflation, or I guess I could more properly say that inflation, aside from tariffs, was just not an issue back when they addressed this during Trump 1.0. Powell and his band of merry men and women have made it an issue now because they are the biggest cause for all of their money printing of the inflation that we've had the last 3 going on 4 years now. So he needs to be honest with people, and which he will never be, and put the blame for this inflation where it lies, and that is by looking in the mirror, number one. But number two, beyond that, he just doesn't want to commit to anything because, again, we don't know for sure how bad the tariffs are going to be, what it's going to be on. There's been all kinds of speculation in the media, who's going to be exempted Will there be exceptions made? And Trump has teased some of this himself, which I think is a loony economic policy. But he suggested that if China were to make some kind of a deal where a U.S. concern can get more than half of the controlling interest in TikTok and do it in such a way that it minimizes or removes the concerns about China being able to gather data and whatnot from that because they wouldn't be the majority owner, then he would maybe look the other way as far as imposing tariffs. And when I hear that, if I'm Mexico or Canada, I would say, are you nuts? You want to take real world stuff and tariff us on energy and stuff, but just because you think you've changed your mind on TikTok now, that's going to upend your entire tariff strategy against China? Are you crazy? Okay, but that's what we're dealing with. So you got that. And then I'll give you another kind of a lark. I was talking to a guy last night about, your political situation in Canada and the likelihood of Mark Carney ended up being a liberal standard bearer. I don't know what the legality of that is because he doesn't have his own writing. He's not a member of parliament. But somehow or other, he may end up being the de facto prime minister, at least for a while. If I'm in Alberta or Saskatchewan and I see that, and especially if he tries to pull some legal maneuver and stay in there for a while, I'd say to hell with it, Trump, here we come. And if Trump really wanted to have some fun and show favoritism over a certain kind of policy, if I was Donald Trump, I would announce on February 1st that, you know what, we're going to tariff imports from Canada across the board unless it's energy from Alberta or uranium from Saskatchewan. And that'll piss a lot of people off. but make Western Canadians happy and make them pine to be the 51st state themselves. So a lot of weird stuff, a lot of confusion, and I had to share those couple little quick anecdotes. But Powell actually went down a list of 4 things: tariffs being number 1, uncertain, immigration. To hear anybody whine about Trump's deportations starting, we've got less immigrants to pick the fruit, and it's going to cost more for labor. And that's going to drive inflation up. I think that's somewhat of a suspect argument, overly simplistic, but there's another one. Regulatory policy is another one that, all else being equal, should help to bring costs down. And then finally, he mentioned fiscal policy, which he never worried about when Biden was president, but now he's going to worry about it when Trump's president. So here again, as Fed chairmen are wont to do, lots of self-serving talk, not covering a lot of issues that need to be covered. But in the end, all the excuses have lined up to where he's just not going to do anything until he has to.
No. The other thing that we talked about was gold rising at the same time as long-term interest rates on bonds were rising at the same time. The question I had out of that: has the Fed lost control over the debt, over the interest rate curve?
I don't know that you can say the Fed has lost complete control over the bond market. The bond market vigilantes definitely have been out there in the recent past, and especially when properly so, I might add, they took the Fed starting to cut interest rates again in September as a sign that the Fed was going to chicken out at the last minute before the job is finally done, and that Jerome Powell was going to commit the same horrible mistake that he continually reminds us all about, of what Fed Chairman Arthur Burns did back in the 1970s, where largely first of all, Arthur Burns unleashed inflation after Nixon turned him loose. Nixon took us first off the gold standard. Inflation was running rampant. Nixon was throwing a fit and wanted Burns to stop raising interest rates to chase up inflation that he caused, again, back in those days. So Burns took interest rates down for a while when it looked like inflation was relenting, but then inflation came back hard again, and he had reverse course and raise rates more, arguably, than he would have had to do in the end had he not changed course. Powell looks like he's doing the same damn thing. And there are some differences between this age and back then where maybe it won't be so bad. But, the bond market smelled that. And so that's why, for only the second time ever in history, you had the Fed take short-term rates down 100 basis points, but the market took Treasury long-term yields up by 100 basis points. The Fed doesn't seem like it's in a panic about it. If they were, they would stop reducing their balance sheet, but they're not. And as Powell pointed out yesterday, there's still abundant reserves. That was his term in the markets, and no problem. And I think deep down, they won't come right out and say this. I think that they hope that the long-term yields staying high, keeping mortgage rates near their highest in many years, et cetera, will help to act as a governor on inflation coming back and on the economy getting too hot. But, time will tell. It's nothing yet that's going to damage the U.S. economy in a big way. But everybody questions how long we can stay with yields at this level when now the annualized run rate by the end of 2025 for interest on a national debt is going to be approaching $1.5 trillion. And that will be the single biggest line item in the federal budget.
Yeah, it makes the Doge Department's job of trimming a couple trillion off the federal budget even that much more hard.
Well, here's an interesting thing. And look, I wish everybody success with this effort. But if you go and read the executive order creating the Department of Government Efficiency, we were all led to believe during the campaign and are still being led to believe that this specific so-called Doge effort is going to be about trimming waste and fraud and abuse and so forth in the government, right? But if you read it and look at what they're doing, you know what the executive order enables?
I have no idea. I just assumed it was what was stated out in the open.
No, what it does, and you can look it up online and read it, it's there. All of the software and IT systems in every federal agency need to be upgraded because that is why government is inefficient. So for those who have talked about all of the billionaire tech bros that were lined up one next to the other at the inauguration and behind Trump, now you know why even some of them that never liked Trump in the past are all there, because this is going to be a monumental windfall for the tech companies and IT companies and so forth who are going to upgrade all of the federal agencies' software, IT systems, whatever it is, all of this stuff. And I'm not saying this that that's something that isn't needed, okay, but I'm pointing it out that expectations have been raised that there are going to be more structural and substantive changes in federal spending that's going to rein things in. And that maybe that'll still happen. I certainly hope that it does. And some of the early stuff that Trump is trying to do suggests that he really does want to take a meat axe, as he should, to the federal government overall. But, that's not going to be an easy job. And you've probably heard me say this before, but if you go back to the last president that made a big deal out of all this, Ronald Reagan, right after he came into office, you had the president's private sector survey on cost control, which came to be known more simply as the Grace Commission, named for its chairman, J. Peter Grace. And they made all kinds of recommendations as far as how to reduce the deficit, get waste and fraud and abuse and all this out of the federal government, which in today's dollars, their recommendations amounted to several $1 trillion of debt reduction. And the only thing of substance that anybody can remember that came of it was to raise taxes by taxing part of people's Social Security benefits if their income was above a certain level. All the rest of this stuff never happened. So while the decade of the 80s saw federal revenues go up by 125%, suggesting that tax cuts really do work and serve to net raise the number of dollars coming into the government, Reagan did zero, worse than zero, to rein in overall spending. And that's why the deficits went up remarkably during his two terms beyond what they were under Jimmy Carter. So bottom line is I want with all of my heart to see Trump whittle all of these things down to size, but I'm skeptical.
Yeah, I'd be skeptical too, because quite frankly, Trump 1.0 and the Biden regime made Ronald Reagan look like an amateur.
Pretty much. Trump loves to proclaim himself as the king of debt, and he's relying, in my opinion, too much. And again, not that these aren't good things. He's relying too much on warmed over trickle down economics, more tax cuts, which again are a good thing, regulatory reform, which are a good thing. It's going to reduce costs for business. It's going to do all kinds of good stuff. But if you don't couple all of that with massive reductions in spending, including for the military, which, here again, he doesn't seem like he's interested at all in reducing the military budget, just rearranging priorities, then in the end, it's going to be a failure.
Yeah, it's going to be interesting. We're about approaching 30 minutes into this conversation about the Fed and the Fed policy, and pardon me because it's a Republican president, but we haven't talked about the elephant in the room, pun intended. There's a new entrance on our bingo card, and that's presidential interference. There's governmental policy that we've discussed, but at the end of the day, Trump has been very adamant that he wants lower interest rates, a lower dollar, and if Powell can't deliver, he wants a new Fed head. So where does all of that start to play into this equation? Because a lot of that would be inflationary, and if the Fed is supposed to be fighting inflation, where do those conflicts start to gel, and what does it mean in the long term to either the Fed policy or government policy?
Well, look, first off, as I alluded to a few minutes ago, the Fed itself, led by Jerome Powell, is the single biggest cause of the inflation we've had in the last 3 or 4 years. And that's a matter of simple math. And the period of time when they went completely apeshit in creating credit with no real world economic activity to sop it up. In fact, quite the opposite when a lot of the global economy was shut down because of this pandemic. Powell and his henchmen and henchwomen created about 30% of the US dollars ever brought into being in the entire history of the US of A. It was just an obscene, over the top, reckless creation of credit and new dollars for which there were no homes, and that's why we had the inflation we do. And there's still a lot of that percolating in the system. So, look, first off, the Fed is not the fighter of inflation. It's, says it is, trying to put it back into the toothpaste tube, so to speak, somewhat. But the Fed, by its function for a long time now, has been an enabler, not only of inflation, but of government overspending. Even when Trump has pointed out that part of the reason for inflation is the reckless spending of the Biden administration, he's not incorrect about that. But the Biden administration would never have been able to do that were it not for being enabled to do it to a very great extent by the Fed and the Fed's monetary policy. So let's never forget that. But that aside, yeah, you've got, President Trump is the big dog on the world stage. He wants everybody to know it. He'll remind you 18 times a day, et cetera. That's him. He's got some right to say that, and part of it sometimes a little bit uncouth, but that's our president, okay? But in his sphere, Jerome Powell is the big dog, and you cannot have two big dogs in the same room when it comes to monetary policy. The problem for President Trump is that the statutes and the Federal Reserve Act are not in his favor. They're in Jerome Powell's favor. And he has essentially no ability to remove Jerome Powell, even if he wanted to. The most he can do is to have, by an act of Congress, you would have to have the Federal Reserve Act changed to give the president that ability, and that's not going to happen. Or you would have to have some cause to impeach Powell, and that's not going to happen either. So the fact of the matter is, whether the president likes it or not, is he's stuck with Jerome Powell as chairman through next May of 26. Powell's seat, aside from that, on the Board of Governors doesn't run out until early 2028. But if he follows the pattern of most previous Fed chairs, he won't hang around for the rest of his term. He'll just leave. So it's been suggested that Trump is going to nominate a would-be successor for Powell sooner rather than later, someone who would be a more palatable public hector against the Fed that he can be himself. And I don't see that happening because I don't think any would-be central banker is going to screw up their own nest before they're even in it by attacking the guy that's there now, because they'll get the same treatment later. So that's kind of a pipe dream. I have said before, and in our conversations as well, that Trump is going about this all wrong. If he really wants to be a transformative leader, he will acknowledge that we don't even need the Fed. And there's two things he can do. Number one, which you and I spent a whole segment of your, or a whole part of, or a whole podcast of yours on not long ago, is he can come up with a national infrastructure bank so that at least we can have robust economic growth, not based on money first borrowed from the Fed, number one. Number two, and even Ray Dalio at the World Economic Forum mused about this recently. He said, look, the debts are getting to be so extreme and so difficult to service that it's about time that we start a conversation of a new money. What do we do? Okay, now some of the conspiracy theorists and the usual suspects like the Rickards of the world and the other carnival hucksters out there will say, see, we told you they want a central bank digital currency. No, the guy's making an honest comment. We need to do something because the system as it exists doesn't work. And, he talked about the possibility of cryptocurrencies and whatnot. There was a thing once upon a time, and not so much with the US, but with other countries, where you had a government-run currency, not a banker-run currency, and to make sure that you honestly regulated its value in global markets, you had a currency board. You get the nation's top economic minds, and they make sure that you have, at least in the context of all of the fiat currencies today, something that's at least reasonably sound. But something needs to change. And I think that is where the president, to sum up this tirade, needs to focus his attention, because he is not going to win a public pissing contest with Powell. So he should ignore Powell, look at a national infrastructure bank for economic growth without having to depend on the Fed, and talk to people like the Ray Dalios of the world and some others, and say, hey, how do we come up with a currency where we don't have to borrow it as a first matter from the Fed?
Yeah, that's, those are all interesting ideas, but those would require an active Congress, and I'm not sure Congress is going to be willing to write that kind of a blank check, given, the way they are about the national debt as it is.
Well, not on a currency thing yet. The infrastructure bank is something that I think will get some traction. But you're right, on the currency thing, no. The only, I hate to say, but what's going to change the currency issue to where we have a substantively different currency regimen is going to be a crisis.
Yeah, I wouldn't disagree with. And I guess it's a question who, if it's in the next 4 years, who causes the crisis. Is it the government or is it the Fed?
Right. Yeah, we'll find out.
Yeah, but back to the original assumption in question, Trump is asking for lower interest rates, which are inflationary. He's looking for a lower dollar, which is inflationary as well. Even though the Fed has been the cause of the current inflation, that's going to bring that genie back out of the bottle again. And then does the Fed go back to trying to fight inflation, or do they counter Trump? I guess was really the question I was trying to ask and did a poor job of.
Well, look, when you have so many inconsistencies and then just basic problems of mathematics of an open-ended fractional reserve banking system, that's a mouthful, I realize. You don't have any right answers. So the paradox, somewhat, Mike, is that, just as you implied, if the Fed were to knuckle under and reduce interest rates probably before it should or more than it should, weaken the dollar as a consequence. But it's a preemptive move. It's not in response to a big outbreak of deflation or an economic shock. With little question, that will add to the case of inflation, at least in the U.S., continuing to rebound. And then they put themselves right back in the same mess. You know, he's right back into making, in a bigger way, the mistake that he points to continually in history that Arthur Burns made in the 1970s. You know, there could be, I suppose, in some scenarios economically, a more benign and helpful reduction in interest rates and reduction in the value of the dollar that would serve, all else being equal, to firm up weaker markets elsewhere, especially to firm up commodity prices, which are hurting because base metals and some other commodities are low right now, which are hurting some other countries. But here again, there's just so many mixed things going on. I'll throw you an example, and we talked about this off mic earlier, but President Trump's whole shtick on energy. You know, all we need to do is drill, baby, drill. And presto changeo, oil goes back to $50 a barrel, natural gas stays in check price-wise, and the average American's gasoline and home heating and electric utility cost, heating, whatever, goes down by a fair bit. And oh goody, now inflation's back down, and now Jerome Powell, you damn well better lower interest rates. That's a fantasy. The only way that energy costs come down substantially is we have a recession. Then they'll come down, at least for a while, or some kind of a global economic shock where growth, you know, it goes into a tailspin. Then, yeah, sure, energy prices will come down then. Then you'll get your rate cuts, but not for very good reasons that anybody really wants to see. So there's just so many things fighting against that, and that's why, in one of our conversations together on your podcast, I've done it on my own. I've said that that's why my 2025 theme for all of this stuff is let's do the math. And the math is not in President Trump's favor on pretty much anything, especially energy prices. He's not going to get any help, again, short of a major economic shock. Interestingly, among the companies that have pushed back on Trump's claim that we can drill, baby, drill, and Scott Bessent has now confirmed, Treasury Secretary, well, we can increase oil production by 3 million barrels a year, and blah, blah, blah. Well, look, a lot of energy executives have come back and said, no, we see production in the U.S. pretty much peaking right now at a rolling peak, and we don't see any reason economically to increase that. One of the companies who has said that publicly in their releases is a company called Liberty Energy. You know who the CEO of Liberty Energy is? Chris Wright, who is not confirmed yet, but will be as Trump's energy secretary. So, across the board, and this is where Trump's facing some serious disappointment, I believe, and so are people betting on this, that, he's put an awful lot on his ability, or he seems to think his ability, to substantially reduce energy prices. And you're dealing with an industry, at least for domestic purposes in the U.S., that got out over its skis a dozen or so years ago with the shale boom, took on a lot of debt to bring on a lot of productive capacity and develop projects and so forth. Before the market was ready, the price crashed, a lot of them went bust. And as an industry, they've all said since then, never again. And that's why I don't care what company it is, how big or small, almost unanimously, E&P companies in the U.S. are all about capital discipline, returning money to shareholders, keeping their dividends up, all of these different kinds of things. They're not going to go out and again, if they can even physically do it, and have the manpower, find the manpower to do it, which is another question. They're not going to go out again and do the same mistake that they did years ago just to make Trump look good. And that means the only options that the president has left are to figure out where he's going to get some net results overseas where energy is concerned that would soften the global price. But almost everything he has suggested goes the other way. If you're going to add to sanctions on Russia or keep the ones in place that are there, if you're going to bring the hammer down again on countries like Iran and Venezuela, that's not going to bring energy prices down. Might hurt the global economy, but it's not going to bring the energy price down a lot with it. And then last but not least, thinking that you can just publicly browbeat Saudi Arabia and OPEC that have got their own, priorities as nations and whatnot, they're not going to unilaterally fall on their sword for you either.
You left out Canada and Mexico, which is the number one and number two exporter of oil into the United States, and he's threatening us with tariffs.
I was getting to them. I mean, it's beyond dumb, in my opinion, especially when you've got these objectives on energy to make an enemy of countries that are on either side of you that can be part of the equation that you need. For the president to come out and say, well, we don't really need the resources we get from Canada. Oh, really? We get 4 million or so barrels a day of mostly heavy crude from Canada, which our refineries process. The only other place we're going to get that from is Venezuela. And like I said, policy-wise, he's going to go the other direction there. It's just very short-sighted, And I'm an American. I want the best for my country and also for mankind more generally. I love the majority of what President Trump is about, what he's trying to do. But as I've said so many times, we've got a guy who, as president, continually reminds me of Archie Bunker. And even when he says the right things and he's got the right instincts, his understanding of the nuances and how to make these things happen leaves a little bit to be desired. And, bluster and high sounding goals and browbeating other people, friends and enemies alike is okay to a point. But in the end, the economics and the math need to work.
Yeah, no disagreement from this side of the border. Let's take a look at government and let's take a look at a couple of things in math that seems to be very important. If you're talking to congressmen and senators, the price of eggs. The price of eggs seems to be the big thing that's important to them because that's what their constituents want, and that's key to their success. If the price of eggs get out of control, they're in trouble. President Trump seems to utilize the stock market indices as his key indicator. So as long as the stock market's high, he's happy. Stock market goes down, he gets cranky. Which of those two key indicators over the long haul is actually going to win out as far as government policy goes? Is it going to be the price of eggs or is it going to be the stock market?
It's going to be the stock market. Eggs are, obviously they're a staple food, but everybody that follows it knows. And now the Trump administration is being hoisted on its own petard, if I got that old saying right, or by its own petard, however that goes. Talking about eggs, when bird flu and a lot of farms that raise poultry just being they're all being destroyed to try and eradicate bird flu. So you got a shortage and the price goes up. That has nothing to do with government policy per se, or certainly not even monetary policy. But as far as the stock market, you're right, and this is where I want to go back to a statement I made earlier about what happened on this past Monday in the market, where you had a pretty sizable one-day drop, mostly in the darling semiconductor stocks. But it also reverberated, and this is a shot across the bow to investors. It also reverberated to energy companies, some utilities, even some nuclear energy technology themes, because not only did the folks behind DeepSeek seemingly demonstrate that they can build at least as good of a mousetrap for a fraction of the cost, but that it would use a lot less energy in the mix. So everything that got driven to dopey levels based on the much higher speculative fervor and much higher costs and valuations in the U.S. all got hit. And that's where I think that, Trump is trying to keep the stock market afloat in part and continue to rally economic and market support for what he's doing by all of these grand deals, including this $500 billion commitment from, SoftBank and OpenAI and Oracle that he had a week ago Tuesday. But if that's all fantasy, if most all of that commitment is funny money, what does it really mean in the end? And are we facing a situation where if there's not enough substance underneath it to catch us, Trump is just merely adding to bubbles that were already blown when he took office? He's going to make them worse, which means that bust to come could be worse. I don't know. I'm not wishing that on all of us, because it's going to hurt you up there if the U.S. goes, has a bust again as well. But, that's, for better or worse, that's a lot of what he's hanging his hat on is, are stock valuations. And I use the valuation term loosely. And now all of the cryptocurrency dopiness, including his own meme coins, which is a Looney Tune thing. These just, I think, underscore in his mind that you can create all of this funny money with talk and hopes and dreams and whatnot, and it'll all still be there when maybe the substance catches up. That's a big bet.
Yeah, no doubt. Last question. Given the potential conflict between the Fed and the presidency, we haven't had a recession in a considerable length of time, and we're overdue. Does that conflict trigger one in the next 12 months?
Oh, I think the odds of that are enough to be concerned about and to follow it, of course, because if you get this public carping between the Fed and the president, and it starts to undermine confidence in markets, and it starts to undermine confidence more specifically in President Trump himself, and especially if you see, look, if nature takes its course, Mike, we are very overdue for a broader recession. And Powell, I don't remember, I didn't write down these exact terms, but he even suggested himself yesterday when he was asked, not the same question, but one that was looking for the same answer. A lot of households in this country that are going paycheck to paycheck, there is some stress there. The top line numbers look good, but not everybody is participating. So Powell himself acknowledged that. So that's only going to get worse, I think, with what we see in front of us. The bigger thing to always keep in the back of your mind, though, folks, is that, and I've explained this many, many times, I'm going to be doing a renewed series of videos that are kind of tutorials on the economy shortly that, update people on this again. We don't have a business cycle in the U.S. anymore, and really in the world, but the U.S., is the trendsetter for better or worse, in this case, worse. And we have instead, since the 1980s, a credit cycle where central banks are inflationary, they expand money and credit. That leads to great economic activity. Eventually, somebody overdoes it, and that great economic activity gets to be too much of a froth, and then it busts. And then you've got a retrenchment, you have a recession and whatnot for a time, but then they crank the printing presses back up, more QE or whatever, and we start it all over again, and we get a new credit cycle. And then somewhere along the line, you get another place in the economy or the markets, it just gets too stupid to stay afloat, and boom, it comes down, takes everything with it to some extent for a while, and once again, rinse, repeat. We had, and I alluded to this earlier in a conversation, we had under Jerome Powell, the biggest monetary orgy in the history of the universe, in nominal terms, certainly, for a couple or 3 years until they realized that they had overdone it and started to raise interest rates and try and mop some of it up. And they went so overboard that even all the rate hikes to date didn't really do a whole hell of a lot, at least where the U.S. economy and markets are concerned, to tamp things down very much. So, we by rights should be once again on the back end of this new credit cycle, which means we have a recession. We see corporate bankruptcies go up and all this kind of stuff. We haven't seen it yet, but again, we're very overdue. And it's going to be Donald Trump's misfortune that he's going to be in the White House when these things, if they materialize, and I think the odds are very high, again, as a function of simple math, that he's going to be sitting there when it happens. So the stock market's not going to like that. The stock market will probably react badly, and he's not going to like it. He's going to blame the Fed for it, et cetera. And he'll be partly correct when he blames the Fed for having first caused it. But again, there are things that he can do to take the control and destiny of all of this out of the Fed's hands and bring him into his own. I hope he does it, but I'm not holding my breath.
And well, here we are. We're 10 days into the new/old presidency, and we've had lots to talk about, and I'm sure we're going to have lots to talk about in the future. But in the meantime, if people want to follow your musings, where would they do so?
Easiest thing to do is you just start at nationalinvestor.com, easy website to remember. I've had that web domain almost since the first day that there was such a thing as the internet. So go to nationalinvestor.com, sign up for my mailing list, make sure you sign up for my various social media feeds because I share an awful lot of stuff many times a day. And I don't just throw stuff out for the sake of doing it, certainly not on Twitter or on LinkedIn. If I send it out, there's a reason for it that has to do with our recommendations or what I think is important. So I'm the one that sifts through everything first so that you don't have to do it.
Yeah, and that's a beautiful thing. Thanks very much for your time, Chris, and I look forward to us getting together and doing this again soon.
Yeah, and then we'll see one another at Minds and Money in Miami in just under 3 weeks from right now.
Oh, geez, I just got back from Vancouver. Yeah, you're right. We're on the road at Minds and Money from February the 20th and 21st.
Right.
If you're in the Miami area, you should take in that event. It's got a pretty good lineup of speakers, high-end economists, geopolitics, and as well as numerous opportunities in the resource space. So it's a good opportunity if you're in the Miami area. Come by, stop, say hello to Chris and I, and we hope to see you there. The Prospector News Podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.